we talk about a yearbook, we will have to talk about the metal focus company's annual publication, like a global platinum and a palladium yearbook focus. Without further ado, let's welcome Nikos Kavalis, the managing director of the metal focus, by giving us the video to let us know the global 2022, the Chinese version publication for global platinum and palladium yearbook.
Ladies and gentlemen, distinguished attendees, welcome and thank you for joining us today for the launch of Metals Focus Platinum Group Metals Yearbook at the China PGM Market Summit during the Shanghai Platinum Week. Many thanks to China Gold Association, the World Platinum Investment Council, and the China Precious Metals Industry Committee of the China National Resources Recycling Association for organizing this event and for inviting us to speak. I am Nikos Kavalis, founding partner and managing director of Metals Focus, the precious metals research consultancy. Today, I will go through some of the key findings of the report. First though, I would like to give some thanks to our sponsors. Anglo-American Platinum is the lead sponsor of the report and provided this great image of their impressive hydrogen-powered truck for the cover. Many thanks also to Shandong Gold and Daozin for their support of the Chinese edition of this report. And of course, special thanks go to our old friends and partners, China Gold Association, who continue to work with us on all of the yearbooks we publish in China and a lot of the other work we do. Thanks also to all the other sponsors of the report, which you can see in this page. Platinum mine supply grew by 26% in 2021 to 196 tons, the highest figure we've seen since 2011. In 2021, supply recovered following the dual impact in the previous year of the COVID-19 pandemic and the breakdown of Amplat's ACP plant. While we had expected a recovery after the disruptions of 2020, the extent of the rise we saw last year was much more than we had initially forecast. The processing of semi-finished inventories that had been built up by Anglo during the ACP shutdown was much faster than we had originally expected. Last year's exceptional gains will now become losses in 2022, however. This year, we expect platinum mine supply will fall by 7% due to the depletion of semi-finished inventories that I just talked about. Plant smelter maintenance is another factor. Recycling grew by 1% in 2021, getting to nearly 61 tons. This was thanks to gains for autocatalyst scrap. High palladium and rhodium prices encouraged salvage yards to destock. Growth, however, was limited by a lack of end-of-life vehicle supplies. The chip shortage weighed on new vehicle sales. High prices early in the year also made financing of inventory difficult. Jewelry recycling was flat year on year, as slight gains we saw in China offset losses in Japan. Now we expect scrap supply will fall this year by 2%. Parts shortages and the chip semiconductor crisis have been limiting new car availability and pushing second-hand prices up. This is resulting in existing cars being used for longer and therefore fewer vehicles being scrapped. Major inputs, including labor, energy, consumables, and mining equipment, also inflation last year, and this drove global ore production costs 12% higher. In fact, if we look at the past 5 years, we've seen a 35% increase in total. However, high rhodium and palladium prices more than offset these gains. As a result, total cash costs by PGM miners fell by 3% on a platinum equivalent US dollar basis. When we combine that with higher platinum prices on average, this meant that PGM miners were doing extremely well last year, enjoying very attractive margins. Demand recovered by 9% last year, and we will cover automotive demand in the next slide, so let's talk about the other sectors first. Jewelry rose last year as a result of gains in Europe and in the United States, fueled by post-pandemic recovery. Rescheduled weddings also helped, as did a boom for high-end brands and restocking. Diversion of spending away from travel and entertainment, as well as government support, also lent support to jewelry. Demand from China and Japan fell in a continuation of the existing trends there of platinum's decline in favor of gold, coupled with postponed weddings and the impact of the pandemic having been persistent. We expect a 2% decline in 2022 as a result of pretty much only China's declines. Demand there is hurt by the pandemic, economic slowdown, as well as continued loss of market share to gold. In other markets, the reopening of economies, improving consumer sentiment, ongoing strength for top-end brands, and weddings taking place are all positive drivers. Industrial demand rose by a very strong 27% last year. This was mainly due to the glass sector that had an exceptionally strong year. Capacity expansions that had been planned for 2020 were postponed to 2021 due to COVID. We also had a very good result from the petroleum sector. Retail physical investment fell sharply last year, mainly due to Japan moving to overall net disinvestment. North America, in contrast, rose by 9% to a record high. Auto catalyst demand saw gains in all regions other than Europe. Chinese demand was up strongly, and if we compare 2021 to 2019, it has more than doubled. This strength is mainly due to the heavy-duty sector. Mainly in China, but also in other developing markets, mostly in Asia, we are seeing more and more trucks using PGMs in their after-treatment systems. This shift is of course driven by changes in emissions legislation. In China specifically, the move from China 5 to China 6. The post-pandemic recovery also helped. These factors will continue to boost platinum demand this year. Improving supplies of semiconductors should also help. We therefore expect a 16% rise in global auto catalyst demand for platinum. Putting everything together, platinum recorded its sixth consecutive surplus last year, of around 26 tons. We expect a smaller surplus of around 15 tons this year. As a result, above-ground stocks will reach nearly 330 tons, equating to 17 months of demand cover. This compares to just 11 months cover seen a decade ago. Looking further ahead, it is interesting to note that we expect platinum will soon enter a period of deficits, as demand grows further and supply gains are limited. When we look at these surpluses, the resilience of platinum, given its price has only suffered limited declines, may seem surprising. Even more surprising would be the backwardation that we have seen in the market at times, and the relative tightness in the London physical market. We believe that all this is a result of strong speculative buying in China. This is driving imports into mainland China up. It is also resulting in a shift of inventories away from London and Zurich and into China. In turn, this means that less and less platinum stocks are available to the leasing market. Mine supply rose last year by 7% for palladium. This increase was less pronounced than the increase we saw earlier for platinum. We need to remember that palladium output in 2020 had been less impacted by the pandemic and the Anglo's ACP shutdown, so we had a higher base to begin with. The rise in global palladium output last year was also lessened by the 7% decline in mine supply from Russia. Early in the year, we had flooding of Norilsk Nickel's underground mines and a partial roof collapse at the company's concentrator. These factors affected the company's global annual output. For 2022, we expect palladium mine supply will fall by 5%. We forecast a decline from South Africa for the same reasons as we mentioned earlier for platinum. We also assumed Norilsk Nickel's palladium production will be at the lower end of their guidance, given the logistical and financing challenges of the sanctions. Recycling rose by 3% last year. This was due to fewer COVID restrictions and record high palladium as well as rhodium prices. A 4% recovery of palladium from spent auto catalysts was the biggest contributor. In other segments, a 9% drop for jewelry scrap was nearly fully offset by a 3% increase in electronics recycling. For this year, we forecast a marginal decline in palladium recycling. Historically rising auto catalyst loadings largely offset the headwind of lower availability of spent auto catalysts. Other scrap is expected to be pretty much unchanged. Global palladium demand rose by a modest 2% last year and is expected to see another modest gain of 3% in 2022. This means that the global total will still be 8% lower this year than it had been in 2019, before the pandemic. Auto catalyst demand rose by a very disappointing 1% last year. This reflected three major challenges. We only had a 3% increase in global light vehicle production. Thrifting and substitution due to palladium's high price was seen last year. Last but not least, battery electric vehicle penetration continues to grow in key markets. The expected improvement in automotive production this year means that palladium autocatalyst demand should increase by 4%. Nevertheless, the total for the year is still 7% lower than the 2019 peak. Other sectors are also struggling to recover to pre-pandemic levels. High palladium prices are encouraging substitution to other materials across a number of applications, for example, dental and electronics. Jewelry demand, meanwhile, is in a difficult place. Fashion favors yellow alloys in many key markets, and high palladium prices favor platinum over white gold when we're looking at white pieces. The limited extent of last year's automotive demand recovery, combined with higher supplies from South Africa, resulted in the palladium market moving into a surplus last year. Metals Focus expects that in 2022 the market will return to a deficit. However, given expectations of battery electric vehicle penetration in the future, our longer-term outlook is that palladium will, in the next few years, move into a structural and persistent surplus situation. Rhodium mine supply rose by 32% last year, mainly as a result of the themes mentioned earlier relating to South African mine production increase. In 2022, we expect mine supply will fall by 10%. This again is almost entirely driven by a 12% drop in South Africa. This reflecting the depletion of semi-finished inventories and planned smelter maintenance. Recycling rose by 8% last year, as refineries were able to resume normal operations and some supply chain frictions eased. High PGM prices also encouraged destocking at scrapyards. We expect recycling will decline by 1% this year due to poor availability of spent autocatalysts and some supply chain challenges continuing. Turning to demand, automotive offtake was only up marginally last year and ended up being 6% lower than in 2019. Although the post-pandemic recovery has been helping, the chip shortage hit demand hard last year. We forecast autocatalyst fabrication will grow by 5% this year on the back of higher vehicle production as the semiconductor shortages ease over the second half of 2022. As a result of all this, we saw a 1.2 ton surplus in rhodium last year, the first in 4 years. We expect a return to deficit in 2022. This will leave above-ground stocks by the end of this year at just under 20 tons, 41% lower than they were at the recent peak back in 2011. Let's now turn our attention to prices and start with platinum. As chip shortages ease, helping light-duty vehicle output, and also as truck and bus loadings continue to increase, we expect platinum's fundamentals will improve over the next 12 months, eventually pushing the market into a deficit. We believe that this should help prices recover into 2023. At the same time, we have to also take into account platinum's links to gold. As we expect gold prices to weaken over the period, the upside for platinum prices should be limited. Palladium should also recover from current levels in the next few months. In addition to improving actual demand, possible rebuilding of depleted inventories, for example in China, may also boost palladium prices. Looking finally at rhodium, while it is hard to see prices return to the $30,000 peaks that they reached in the aftermath of the ACP supply disruption, as automotive demand recovers late this year and into 2023, the market should tighten and prices should once again rally. With this, I would like to thank you all for your attention. I would like to welcome you to follow us on WeChat so that you can keep up with the various reports and insights that we publish, as well as get in touch with us if you're interested in any of our products. Once again, I would like to thank the organizers for organizing this webinar and for their kind invitation. Lastly, I will end with my wish to be able to travel back to China and get the opportunity to meet once again with all my good friends and clients. Thank you very much and goodbye.